Good afternoon and welcome to the Blue Line Metals Edge here for Friday, September 2nd. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. If you're watching this on YouTube, be sure to like and subscribe to our videos. If you need additional information, go to bluelinefutures.com or shoot us an email at info@bluelinefutures.com. We'd love to hear from you. Get into the markets here today. Lot of nervous jitters coming into that payroll data that came out. We saw the non-farm payroll came out 315,000. The expectations, they boosted them up. It was actually like 318 coming into it, so a little bit lower than expected. And you also had the unemployment rate tick up, 0.2%. So with that, the U.S. equity markets, they all shot up pretty good. We've got the Dow Jones, the NASDAQ, the Russell. S&P's up 45 points. NASDAQ's up 130, or the Dow Jones up 329, Russell up 21. So you got this kind of turning back up here. I wouldn't be surprised if we see this retest back on this. This is the 50-day moving average right here. We'll come back up to that. We'll see how she trades around there. You've already got the S&P getting really close to it. And then the nice thing was we saw the dollar index come off. The dollar really needed to take a breather. With that dollar selling off, kind of brought some life back into things like gold and silver. Gold up about $15 right now. So we could see this support, this 1685, that's been a good double support here for a while. I mean, look at this double bottom on the chart. And let me just go fully to this chart here. So here's your double bottom. And if you look back, this goes back a few years. 1685 has been a critical level of support. Now, I did outline a few things that are going on. New contract highs in the dollar. That was yesterday. Treasury yields broke out. They're coming off just a touch here today. The better expected data reaffirms the Fed's aggressive stance on policy hikes. So getting into a couple other things here and looking into the report, the silver market, it did break through and it cracked through those old supports. So that's going to be your next resistance level, right up around like 1830. Somewhere in that range, 1830, 1840. Now the system is still short on gold. It's up quite nicely. It's going to have a stop working right here, 1734 on gold, 1810. Should have been stopped out already, but the true stop that the system will have is 1898. It's kind of you can decide whether or not you want to use some of these suggested stops. This strategy is doing real nice. This bull call spread here in the silver market that we outlined. If you're not getting this report, I'll also write about the bull call spread in the Kitco article I'm doing later today. This is a little troublesome. Gold-silver ratio, 96.78. A lot of people, when I'm telling them that this thing's knocking right at 100, they were pretty surprised by that. And then you look at copper. Copper broke support. It is trading back up into the range right now. It has a small, just a touch of short covering going on, but unless you start getting this news, like this China locks down 21 million people, shuts down public transportation, everything else, you're not going to see copper prices run up too much at all. And then another thing on that gold market, I'm really surprised this didn't get more coverage than it did. It seems like it's getting more coverage today. Taiwan shoots down drone for first time on Chinese coast. So I thought that if you do see this escalation, you're probably going to see gold prices start to move back higher. So I think it might be worthwhile to, take some far out call spreads on silver, outright call options. I'm sorry, on the gold market, in case something really comes to light on that. The system right now at short copper, I knew it was going to do this. It was going to end up selling the low, and then the market's going to go up. So what you'll do is if you didn't enter into a short copper, you want to just work a stop below yesterday's low. So if it triggers into it, you'll be clicked into this particular system. The platinum market is short, but it's got a nice little short covering bounce here at the moment. Stop loss 841.80. It's short at 855 right now. The thing about platinum is that the correlation matrix, it's actually the worst correlated metal to the dollar right now. You could see, I had it pulled up here. It was platinum versus the dollar. There's a 78% inverse correlation. So you really need that dollar to go down for platinum to go up at the moment. Price pulled up some other things here on the Fed watch tool. It almost stayed the exact same. 70, it's 70-30. And it even was like that after the report came out. 70% chance of a 75 basis point rate hike. And then looking at that 2-year, 10-year spread, that came up just a touch. This is going to be your 50-day moving average on it. So it's hugging right up against here. Dollar took a breather today. And then on this system, it is long the dollar. It's got a pretty tight stop working, so that's good. On the oil market, right back at critical support here. This has been a hard bottom. So we're playing oil mostly to the long side. We'll probably get out 90.66, tighten up those stops, put them to our entry points, see if we can run up just a touch more. The OPEC watch tool, it's continuing to price in that there's going to be an output increase. So I'm a little surprised by that. And then that's pretty much it on this. You can see volume's going to be lighter. And of course, people are cutting out here for the day, getting into this, getting a jump start on this holiday weekend here. So nothing else out. I'll probably shoot out the reports over the weekend to everybody. And then, I'll follow up with anybody on Tuesday. We'll probably have some refresh risk ranges going out into on Sunday night and then also possibly Monday. So these probable ranges, a few of them they had updated, and I think that if we get some increased volatility, I might shoot out some new ones and refresh all these. So you have any questions, you want to check out any of these reports, give me a buzz, 312-858-7303. Remember, futures and option trading does involve risk loss, may not be suitable to all investors. Good luck, good trading.